Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the markets, not only the domestic markets, but the global markets were oversold. The rollovers was highly on the negative side. I mean, there was a strong short rollovers being seen in the October series. So some sort of initial sell-off could be seen, but market might take some support at the lower levels, and from there we might see a bounce back rally, and market exactly behave in that similar manner. For last week was a truncated week. For Tuesday and Wednesday, market remained negative, and for last 2 days, market rallied sharply and traded on a positive note, and also ended on a positive note on a weekly basis. Now, just a general disclaimer because going to the final video. This video is for education purpose. Consult your financial advisor before investing. So now let us go to the Nifty daily charts and let's try to figure out what could be the trend for the next week and what could be the global trend. So before Nifty, let us go to the Dow Jones daily charts so that we can have a clear view what could be the global trend. Even Dow Jones last week, we have seen that it ended uh, on a positive note because Friday was a huge, very strong candle. You can clearly see it has broken the falling channel breakout. Again, RSI has also given a breakout from the oversold region, and definitely, the global market seems to be quite positive at this juncture. Looking at the Friday's close, and we might see a rally coming in into the global markets from these levels also. So definitely, the sentiments of at least the U.S. markets seems to be positive at this juncture, and we might see stability into the markets because the downfall was seems to be arrested. I mean to say, it has taken support around the multiple support area. You can see Dow Jones has taken support around the important crucial support where the swing low of the June month has turned out to be the strong support zone at current levels. So now, friends, let us go to the Nifty daily charts and try to figure out what could be a trend for the next week. Again, Nifty daily charts has also witnessed, a strong support on the lower side. You can clearly see this was the cluster area in end of the September, and most probably those area maybe around 19,300. Nifty has taken a support, and after that we have seen a bounce back rally in the last three trading sessions of the last week, and it has ended on a positive note. Now let me go to the weekly charts of the Nifty, so with that we can have a clear view. Now you can see the Nifty weekly chart has formed a long-legged doji from the oversold region. You can clearly see a long-legged doji, which clearly signifies so the support coming in at the lower levels. Now this is what we have seen in the Nifty daily charts. Now, again, one more important point which I would like to highlight is the U.S. bond yields. We will see the U.S. 10-year bonds, so that we might have a clear view that what could be the supporting uh, analysis or supporting uh, rational which might support or which might turn out to be the bullish trigger for the markets. You can clearly see the US 10-year bond yield has been moving into an upward rising channel. The bond yield has risen significantly in the last 1 month. You can clearly see it is just trading near its the major multiple resistance area of this rising channel, and again you can see the RSI has also entered into the overbought region. So this could be the area where bond yield might cool off from these levels. I'm not saying that from Monday onwards it will start cooling off, but this is the crucial area from where we might see bond yields starts getting cool off at these levels. And once this happens, we might see a global rally from this particular juncture. So now let us come back to the Nifty daily charts, and we will try to discuss the important supports and resistance level in Nifty for the next week. So friends, the first support in the Nifty is placed at 19,545. Below that, the second support is placed at 19,436, and below that, the third support is placed at 19,333, which is the swing low of the last week. On the upside, the first resistance is placed at 19,766. Above that, the second resistance is placed at 19,848, and third resistance is placed at 19,944. These are the important supports and resistance level in in the Nifty for the next week. Traders should try to watch out these levels. Looking at the weekly candle and the daily setup, we feel any dips should be used as a buying opportunity. So again, the setup seems to be quite positive, but in the last three trading sessions, we have seen Nifty has rallied almost 300 points from the swing lows. So there might be some sort of cool off, but that cool off should be used as a buying opportunity, purely looking at the candles and the technical parameters. Now, friends, now let us discuss the derivative data of Nifty. First of all, we will discuss the Nifty call data. In Nifty calls, you will see on the screen the action was seen in uh, 19,700 calls, 19,800, 19,900, and 20,000 calls. Now, here you can see the implied volatility is low. It is between 7.59 and 7.76. The percentage change in the premium is positive. There has been a rise in the volumes, the rise in the open interest. On the immediate basis, 19,700 could act as an immediate resistance. If it breaks, then we might see Nifty rallying towards the level of 20,000 mark. So most probably, in short, the data is positive, but Nifty needs to close above 19,700 mark. Once it closes above those levels, then Nifty might see, or Nifty might start inching towards the level of 20,000. Now here in this data, the most important factor which I feel could be the positive trigger is the lowest implied volatility. So this could bring in bullish trend for Nifty in the next week. So definitely, any dips should be used as a buying opportunity. So friends, now let us discuss the important derivative data of Nifty puts. In Nifty puts, the action was seen in 19,600 puts, 19,500, 19,400, and 19,300 puts. Now here you can see there has been a drop in the option premium, which signifies that you know the smart money is already into writing out of the money puts, which is the bullish shine for the markets. Here the implied volatility is between 9.22 and 10.88. There has been a rise in the open interest, rise in the volumes. So on immediate basis, the crucial support in the Nifty would be around 19,600 mark, where there is the strong concentration of volume as well as the open interest. If 19,600 uh, is sustained, then there is no issue in the markets. Any dips should be used as a buying opportunity, but if it breaks and closes below 19,600, then Nifty might drift down towards the level of 19,500. But most probably 19,500 could act as a strong support area. From there, one can start buying long positions from those levels. So most probably, the trend seems to be positive technically as well as on the derivative data. So friends, now let us discuss the Bank Nifty daily charts. On the Bank Nifty daily charts, we have seen that Bank Nifty has formed or have witnessed a downward falling wedge breakout. It is a bullish signature sign at this juncture, and this breakout is seen in the oversold region on the hourly charts, and on the daily charts. RSI is also in the comfort zone. You can clearly see it is on a verge, or it has almost touched the RSI line. It is on a verge of a breakout from these levels. Now let us just look out that Bank Nifty weekly charts. Now Bank Nifty weekly charts has formed a hammer pattern, and the trend deciding level from the Bank Nifty would be the high of the last week formation. which is 44,566. Once Bank Nifty crosses those levels, then we might see Bank Nifty rallying towards the level of 45,000. And if it breaks those levels, 45,000, then it can extend another 4,500 rally, 4,500 points of rally, maybe towards the level of 45,300, 45,400 in the next week. So at this juncture, we feel that Bank Nifty seems to be positive. The trend is positive. The weekly chart is positive. The daily chart is positive. Positive. The momentum indicator is also giving positive signals. So definitely, one should look out to go long at the lower levels, or if there is any kind of a cool off next week on the initial days of the week, maybe on Monday or Tuesday. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 44,108 is the first support. Below that, the second support is placed at 43,857, and third support is placed at 43,600. On the upside, uh, the resistance is around 44,500. Second resistance is around 44,756, and third resistance is around 45,156. So these are the crucial supports and resistance level in Bank Nifty for the next week. Traders should try to just follow those levels and watch out for particular pattern or the primary trend. Once that is established on dips, one should go long at the lower levels. So friends, now let us discuss the derivative data of Bank Nifty calls. We'll see on the screen. In Bank Nifty calls, the action was seen in 44,500 calls, 45,000 calls, and 45,500 calls. Now here you can see the rise in the open interest, the rise in the volumes, implied volatility is in comfort zone between 9.56 and 10.81. There has been a slight drop in the option premiums. So on immediate basis, we can say that 44,500 could act as an immediate resistance. If it breaks, then Bank Nifty might rally towards the level of 45,000, and above that, it can rally towards the level of uh, maybe 45,200 to 45,300, and so on. So definitely, data seems to be okay at this level. The important thing is the low implied volatility, which is giving the bullish sign. But a cool off cannot be ruled out at these levels. So friends, let us discuss the Bank Nifty put data. In Bank Nifty put, the action was seen in 44,300 puts, 44,000 puts, and 43,500 puts. Now here you can see there has been a drop in the option premiums. The implied volatility is high. It is between 11.42 and 12.96. So there has been a significant drop in the Bank Nifty options. So it clearly indicates that the smart money is already into writing the out of the money puts. So the data is bullish, uh, and one should and looking at global uh, closing, US, specifically the US markets. Again, the gift Nifty is also trading positive or has ended on a very positive and strong note. So we might see a gap up opening on Monday. If there is a gap up opening, one should not go and try to jump and buy the Bank Nifty. One should wait for some cool off, and then after a decent cool off, one should go long at the lower levels. And if those who are long in the last three trading sessions should try to book profits at the higher levels, one should wait for some cool off and then again try to enter long at the lower levels. So again, the data seems to be positive. So now the charts technical data is positive of Nifty and Bank Nifty and global markets. The derivative data of Nifty and Bank Nifty is also seems to be positive. So the overall view seems to be uh, that any dips should be used as a buying opportunity, and the theme could be, is market poised for a pre-Diwali rally? This could be the theme for next couple of months. So definitely the momentum seems to be positive. Any dips should be used as a buying opportunity. So friends, now let us come to the final segment of our show, which is positional call. I've identified one stock. The name of the stock is Titan. Again, the festive season has already started, and there could be the boost in the consumption of jewelries and watches and all different type of uh, the discretionary consumption or whatever we called it. So definitely you can see the setup is positive. The stock is moving in an upward rising channel, making higher tops, higher bottoms from February 2023. The setup is positive. The stock is poised for a rally from this levels. You can see the price volume actions is also indicating the bullish sentiment or bullish undertone in the stock. The RSI is also comfortably placed with bullish signal at this level. The stock is currently quoting at 3,309. So short-term investors, swing investors, positional traders, even long-term investors can accumulate the stock Titan in the range of 3,309 and on corrections to 3,250 for an upside target of 3,650 for short to medium term. Short to medium term means next couple of months, maybe 2 to 3 months. So definitely, again, the stock can rally once it breaks this rising channel, but we have taken a conservative target of 3,650. So again, I would like to just highlight that swing traders, positional traders, investors can accumulate the stock in the range of 3,307 and on dips to 3,250 for an upside target of 3,650 for short to medium term. So thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Uh, and thank you very much for watching the show.